Yes sir, we're back. In today's video, I'm gonna show you guys, or I'm gonna tell you guys why you should not get approved or why you should not try to get into a car, any type of car loan if you got bad credit. So essentially how a car loan works is, this is all based off your credit. So the first thing you need to know is what an APR is, aka an annual percentage rate. So yeah, basically that rate, like the higher that rate is, basically the more you're gonna be paying. Okay, so first things first, before we even talk about APR and all that, the first thing I recommend for you guys, don't try to finance a car, especially if your credit's bad. Focus on your credit, build up your credit, and save up some cash, and just go ahead and buy a car straight up so you don't gotta worry about no payments or no nothing. The reason why I say that is because, like, dude, you might be getting like a brand new car, you might get a car that's like cool at the time, but you're gonna be stuck in that car payment, or you're gonna be stuck in that car loan for like, you could be stuck into it for like 5 years plus, depending on what type of interest rate you get and what type of loan you sign up for. So within 5 years, you could have saved up double the amount of money you needed to buy the car, and you could have did way more with all the money you're gonna be putting into it. It's basically just gonna keep you broke because you gotta pay that every single month. Dave Ramsey had quoted, I'll put the clip like right here.
Hi Jacob, how are you?
I'm better than I deserve, Dave. How about you? When to sell a car. So I drive a 2005 Honda. It's got like 181,000 miles on it. My question is, when do you know it's financially a good idea to get out of that vehicle and not continue putting repairs into it?
You know, the weird thing is that you can hardly ever justify selling a car based on repairs. Let me give you an example, okay? Drive the car all the way down to, it's a $2,000 car. It's not yet, but someday, okay? You know, 300,000 miles on it, you've worn the wheels off of it, and you have a $500 or even $1,000 repair, right?
Yeah.
And you say, well, you know, these repairs are killing me. I'm going to go buy a nice another little Honda for $12,000. Well, the first year, that car is going to go down more than the cost of that repair on the old one. You follow me? So almost never can you justify mathematically buying a better car.
Dave Ramsey said, and he's a millionaire, so he obviously knows what he's talking about, but Dave Ramsey said it's really never like a smart decision to go and buy a brand new car or finance a car or anything like that, because the cost of, like, the amount of money you're putting into the car for the payments every month does not equal up to the amount of fixes or the amount of repairs that you got to put into your car as it's getting older, because not only are you having to make the monthly payments, but you still have to fix up on a car. So things you need to know before financing a car: you need to know how to get your credit up, you need to know about interest rates. So all a credit score is it's just a measure. It's not even a measure of debt. Basically what your credit score is can you make your payments on time? Can you make all your payments on time? Because if you're missing payments and stuff like that, you can't make any payments in full on time, your credit's gonna be low. But if you're making all your payments on time, paying in full, I'm talking about you're going crazy, your credit's gonna be high. Before I got this car right here, I was at a 703 credit score, so my shit was up there. But the biggest thing that was holding me back was my age and my history with the credit. Even though my score was high, I only had it for probably, I'm just now having my credit for a year basically. So that's another big thing, credit history. Credit history is way more important than a credit score, because you can have a 700 credit score and have your credit for like, or you can have a 700 credit score and only have yourself for like a couple months, but they'll rather take the person with like a 670 or something like that, and they got things under their name, like they already had a car loan. Their credit is gonna be way better than the 703 credit score. So make sure your history is really good. APR, you need to know what your APR is. So this little thing right here, I'm gonna have to blur out some of this. So your annual percentage rate, APR, you do not want that to be that high. Basically, my APR being that high means that I'm gonna have to pay all this money. APR and interest rate basically goes hand in hand. So this car is only worth $7,000, but because this is so high, I'm gonna have to pay this and this. So in total, I'm gonna be giving these people $29,000. $29,000. All because I had no history, so now my APR is so high. And also, when you're financing a car, they can just also charge you money. Look, that's just a finance charge, $11,000 just because they're giving you the car. Before I got this car, I had a green truck and I had a blue Honda Civic, and I blew the head gaskets on both of them hoes, so You know what I mean? I was working 2 jobs and I was walking to both of them. I just needed to hurry up and get into a car. So a person like me, I didn't really have a choice. I'm not even gonna lie, I could have stuck it. I could have fixed up one of the cars, but hell no, I needed to hurry up and get a car. The people I was asking people for rides and stuff. I was like, nah, I can't do that no more. Like, it was starting to act weird and all that. I'm like, dog, I'm giving y'all gas, man. But that's besides the point. I had to hurry up and get into a car, so I didn't have no choice but to finance a car. But for the people that's watching this, you most likely have time. Do not get into, or don't rush into a car loan, I would say. Not all car loans are bad. You can still get into some good ones, but just don't rush into it, or you're gonna get messed over like how I did. But yeah, your APR, you want that to be as low as possible. So anytime you go to like a dealership or you're trying to get into a car, just try to negotiate a little bit. Like, say, hey, like, is there any way I can get the APR lower? And if they're not budging, like, don't get the car. Anything over, like, I think anything over 7%, automatically bad. Do not go for that shit. I'm at a 21%, and some people get higher than this. So yeah, this is why I'm telling y'all, just don't even try to get into a car loan if you have bad credit. I'm gonna go ahead and drop a second video, but I'll go ahead and give some bonus tips just for the people that's watching, cause y'all know I stay showing love. So a good way to escape that, you just gotta pay extra money towards the principal, because it's like some of the money's going towards the car, and then another percentage of the money is going towards the actual loan, right? So if you're paying these people extra money, then you're gonna be paying off the car faster. That's the whole thing you wanna do, is pay this car off as fast as possible, so you don't even have to ever worry about another car loan again. And then once you make so many payments over what they're asking, you can go to a credit union, which is what I'm doing. I'll actually be able to get approved in February because I already took the steps to do it. I was talking to a person at the bank. He said, hey, you're doing good, just give it a couple more months and then come back up. So yeah, just take it to a credit union, and then they'll refinance the car for you for a lower interest rate and a lower APR, so you're not paying over. So in the next video, I'm gonna teach you guys how you can build up your credit so you can get into an actual good car loan, and what a good car loan actually looks like. And another video, I'm gonna teach you guys how to escape a bad car loan. Yeah, I'll see you on the next video, man. Peace.